Welcome back. It's still Business Morning, and we're coming to you live from our studios here in Lagos, Nigeria. Well, of course, on the program, we're talking about the manufacturing sector. It's been contributing as much as 6.2, or rather contributed as much as 6.21% to the real GDP for the first quarter of the year. And that's according to figures by the National Bureau of Statistics. And of course, there was a latest report by Renaissance Capital recently also about how the manufacturing sector has contributed about 1/3 to the real GDP growth. Well, it's good. The numbers look good. The numbers look bright. But of course, there's still the issue of how this directly affects the economy in terms of reducing the number of those unemployed. I've been having this conversation as regards how the manufacturing sector has improved on the economy with the Managing Director and Chief Executive Officer of Coleman Wires and Cables, Mr. George Onafowokan. He's still here with me in the studios. Thank you so much for sticking around.
Thank you, Harriet.
Well, just before we went on that quick break to catch our breath, we talked about the fact we've seen exponential increase, at least from the last time, from 4 to about 6.21%. But with this increase, we still seem to have no new figure as regards unemployment and, of course, how the value chain, the SMEs value chain in the manufacturing sector have fared.
I think we have to be looking at things also realistically. The SMEs are not doing that well in Nigeria. I think the system is still struggling to find out how to create an SME growth, proper growth. Now, why I say so is that I'll give you an example of a discussion I had with one of government parastatals in the finance sector. And it was shocking for me to actually hear this, because he said part of the focus was given to them to actually look at growth of SMEs. And for 3 years, he actually attempted to grow the SME business. And he said the reality of it was that all he could remember was what happened to the sole of his shoes, as in they were out. And he said, because unfortunately, in those 3 years of really trying, he went to the abattoir, he went to different parts of Lagos, different parts of the country to try and grow SMEs. But he said, look, there were some few problems that he actually got, and then he couldn't go far. After 3 years, they changed their strategies to medium and large, and they were achieving the figures. But now, he said the failures, what happened was that there were cultural problems, there were behavioral problems. Now, cultural problems is that, look, you had an SME that they had the MD as the man, the DMD as the wife, the quality control guy as his uncle or his brother that had English degree, and they were in manufacturing. And then they had no structure. They had no accounts, no book. Then you have behavioral problems. He said the second thing they actually saw were the behavioral cultural problems. The guys actually were more seen to try and be in the eyes of the people rather than in the eyes of their business. So they created massive impressions of themselves, bigger cars, bigger titles. He said it's 3 years, all he remembered was the sole of his shoes.
So, in other words, this growth that we've seen the manufacturing sector record, this 6.21% growth that we've seen, the small and medium-scale enterprises haven't really contributed as much. It's been mostly the medium to large-scale enterprises that have contributed.
In my view, it will continue, unfortunately, and this is a bad thing to say unless the government really has to relook its strategy. It will continue to be a medium to large-scale expansion strategy that will grow this economy.
But then, as much as possible, we know that the small and medium-scale enterprises are supposed to be the drivers of the economy. And in terms of value chain, they contribute more than what the medium to large-scale enterprises should.
They do contribute a lot, but they don't have access to the funding. Now, that's
we're back to funding again.
Yes, it always comes back to the funding. You cannot grow your business with only your money. It's impossible. You grow your business, the first rule of business, you grow your business with other people's money. The banks don't grow the business with their money. They grow with other people's money, myself and yours, deposits in the bank. So every business grows on other people's money. Now, if I don't have access as an SME to the funds, how do I grow that business? So you cannot grow your business with just your savings. You grow your business with other creditors, other investors. Now, you need that belief in the system that the actual system should grow SMEs. Now, for it to grow an SME, you must create confidence within the system to finance SMEs, first and foremost. Now, yes, we have microfinance banks. Yes, we have all that. Let's not even want to go there. What we just should focus on first is how to gain confidence to the SMEs. How do we get them to create a structure? I think our system spends so much looking at how to give these people money, doesn't look at how these people actually qualify for the money. Because when you actually go to the system and ask them, why are you people not giving these people money? They tell you they fail criteria. So we should change our system and get the SMEs, the manufacturers, the small-scale ones, to see, okay, how do we create your structure to even do accounts? How do we create your structure to separate yourself, pay yourself a salary, not just write a check at the end of the month, which was one of the problems the guy said. He said he asked most of them during his 3 years, and none of them even knew what they paid themselves. They just took money at the end of the month. He said, so how do I borrow a guy money that doesn't even have a structure of how much it takes from the system? So you must, I think we need to now re-educate our SMEs on growing. Whether they're educated or not, it's not the issue.
It's a mindset thing, actually.
It's a mindset. So we need to create the mindset. And you need to grow the SMEs to grow out of SMEs. Because as an SMEs, the overheads in this country, it will kill the business. Because the same guy wants to buy diesel for his business. Once in a while, he'll just say the cost of diesel is too much. It shuts down. But he still has workers. It's either he lets the workers go, maybe there are only 2 or 3 or 4 of them, and decides, I want to buy diesel, or I want to keep them there. And he doesn't want to lose them, but he keeps buying the diesel. Then you find out it doesn't grow that much. But he still needs other funds to start growing. Once it impacts the market, he needs other funds to grow the market. Now, we need to create a system that actually allows us to train these people and train the individuals, train the companies, the SMEs. It might not all be formal, because I think we always all look for send them to one university or one business school to create true government support to come. There are those initiatives, and I've seen them, where they actually get people to come to the schools and learn. We need to find out, because our informal sector of SMEs is actually higher than the formal guys that know what they're doing. So we need to find out other system which policies will allow us train these people, be able to support them financially and grow within a cost they can bear, not at 25 to 30%. So it's a cost they can bear.
Well, let's still go back to this Renaissance Capital report, because, you know, based on what you've just said now, it seems as if the smaller companies did not actually, you know, contribute as much as we want to the GDP. But then it said that smaller manufacturing subsectors are growing faster than the food and beverages sector. So it almost begs to reason that what is actually contributing to the growth that Renaissance Capital has actually seen, and what industry experts like you are actually also seeing?
I think it's 2 ways to look at it. From our side, we might see more of the large scale and the medium scale. And we will also see some of the small scale, because you have a supply chain element of our business. And I always say for cable, we're like almost a bureau of statistics of the same industry, because we actually see everybody, because there's no industry that doesn't need cable. Now, but for us to look deeply into why this growth is happening, there must be a conscience of thought to say that really, let's be real. Now, let's be real means that they've also said it. Cement. Cement is not for a small business. It's not even a medium-scale business. Tobacco is not for the small-hearted. Beverages they've amounted to really is not beverage that you're doing at your small shop in your house. It is beverage that are coming from places like Indomie noodles and the rest. And these are large-scale companies, the Unilevers, the JSKs, the Rebinas. Now, what they're talking about are all amounting to guys expanding in large scales. Unfortunately, the small and medium scale element of it, I don't think is as big as we expect it to be yet. It can change, but the manufacturing sector figures and the industrial figures are coming for medium to large.
Okay, so In the short to medium term, because this is a half year already, we started the second half of the year, and very soon we should be expecting to see the second quarter results for the economy, for the real GDP growth and the rest of it. What are your expectations? Are we going to move from the present figure that we have now of 6.21% for the manufacturing sector, or is there going to be a drop?
I don't see a drop in the. If we see any drop at all, it will be a drop maybe in the first quarter of next year. The projections and the projects are already taking place now, so most of the expansions are happening. The only thing that could cause a drop in anything that is going to happen in the next 2 quarters, really, most likely will be political risk, political and security risk. Now, if we can remain status quo and keep political risk and security risk at minimal levels, because we won't say we can wash it all out. No, if they can keep that at minimal levels, I expect a sustained figure over the next 2 quarters. Now, 2015, I think, is really political, which is presidency, elections, and everything else. So that will be a figure that is, anybody making an assumption now is making an assumption based on what happens in politics. So I won't even want to go there. Let's go with what we have now.
Okay. Well, that's...
and be positive about it.
Let's be positive about it. Let's be positive about it. But thank you so much, Mr. Onafowokan, for coming on the program this morning. It's been an interesting discussion. Well, I've been speaking with the Managing Director and Chief Executive Officer of Coleman Wires and Cables, Mr. George Onafowokan, and we've been taking a look at the manufacturing sector with particular emphasis on recent reports by the National Bureau of Statistics and the Renaissance Capital on the fact that the manufacturing sector has seen impressive growth in the first quarter of this year, of course, which was also collaborated by Mr. Onafowokan. But that's the program for today. Thank you so much for being a part of it. I'm Harriet Albini.